Welcome to On the Chain. This is Jeff here with co-host Chip. What is going on, Chip? It's great to see you tonight. It's been at least 24 hours. Tonight, we are going to talk about, Coinbase relisting XRP, because you know what? Just like everybody else, Coinbase loves the XRP. That's just how it goes. Exactly. And did you realize that a majority of those cryptocurrencies out there are actually commodities? So says the head of the CFTC and some others. So I think we got to kick this thing off. You know why? Because tonight's an exciting night. I'm bullish. I'm sure you're bullish. Gary Gensler, he is the bear, but that's okay.
Or a dope, whatever word fits.
Or whatever word fits, but that's okay because I'm ready to kick this thing off if you are.
Let's go.
Welcome to On the Chain.
So there's some interesting developments over there at Brian Armstrong, Coinbase, right? He's, it's an interesting journey over the last, I'd say like 4 weeks, 5 weeks, right? And if you go back a little bit further, they went public. And so you feel like when a company goes public and they're under the scrutiny the whole time, and going public, they're under the scrutiny of the SEC, right? They have to do, I's have to be dotted, T's crossed, make sure everything's in line. You go public and then great. And then they go talk to to Gary Gensler and company, and they basically get a Wells notice, which is a notice of future enforcement, just for wanting to do a measly 4% Jeff yield, which is a joke almost in DeFi anywhere. But
4%, man, it's crazy because you go over to Celsius, you're getting a little bit more than that. You go to BitTrue, you can get a little bit more than that. But I'll tell you what is 100% true though, Chip. YouTube says that On the Chain is a security.
What?
Yep. And then you've got someone better saying, warning, every post on this stream is a security.
Well, that might be. But I can either confirm nor deny that, but it's possible, Jeff.
And a great comment here as you're getting into the Coinbase thing. But if you do the math, the CFTC chair said that the crypto market is $2.7 trillion, and 60% of that 2.7 trillion are commodities. So XRP Hollywood is stealing our storm here because that is one of our bigger points for the episode. But yeah, if you add BTC and ETH market caps, you get 60% of the market. Oh, that's interesting. Yeah, 60%. That's interesting.
Yeah, it sure is. Let's throw this up here. Norseman coming in here with the big old support. He says, thinking about organizing an XRP March / meetup at the SEC in DC. I'm over the shiz. It's time, fellas. So Norseman's like not playing. That would be interesting to kind of put a poll out there to see everybody retweet and say, hey, seriously, if we were to do a March, sort of a gathering at the SEC, would you be interested in going? But then you got to pull permits and all this other stuff. So I don't know. One of the things I'm not sure about, Jeff, is that can you demonstrate in front of I understand public areas, but the SEC considered a government entity. So I don't know. We have to, could you pull a permit? You need to make sure you do everything by the law and everything's on the up and up and it's peaceful and everything else.
You definitely have to look at that. I know a buddy of mine is, big into the investigation of terrorism and connecting a lot of the affiliations here in the U.S. And he's done multiple protests on different government property.
Okay, well that's good.
But I don't know in the federal government with all the conditions of as things are going on right now. Who knows? They're putting fences up around DC. So I'm not.
Well, they're putting up around the president's beach house, which costs $500,000, and I'm like, how big is it? Do you need? I mean, how high are the walls, and what are they reinforced with? That it costs like $500,000 for a fence.
I want to know how we bought that beach house.
Yeah, Jeff, that's a topic for another discussion. I really think we got to get into that another time, but that's a good question, of course.
Dude, Miami coin, 400% returns. Thank God for the mayor of Miami. The mayor of Miami is crushing it.
By the way, they do a daily tweet on what's in the wallet, and I had that for another night, but sometimes we don't get to everything. But let's look at this right here. Coinbase CEO says SEC v. Ripple case going better than expected. Investors hopeful XRP will be relisted soon. What's interesting about the tweet that he put out there, Jeff, is it was an older article, but like I guess he's been diving down the rabbit hole. That's what I'm guessing. Like he just went headfirst into the rabbit hole. Like what we like to say is go headfirst into the shallow end for maximum impact. And Coinbase, he's on the Ripple lawsuit. Of course, NASDAQ listed cryptocurrency exchange Coinbase. Brian Armstrong commented that the enforcement action against Ripple Labs by the SEC Monday, referencing a Forbes article titled "The Uprising the SEC Didn't See Coming." That's what he put out. The Ripple case seems to be going much better, swimmingly better than he thought. And that was a Rosalind Layton one. We covered it actually right here on the chain. The article, but it was, interestingly enough, it was from, I believe, September. So, and he said the irony is that the people they're supposedly protecting are the ones attacking them, the Coinbase boss added.
And I'll tell you what, Brian Armstrong is coming out, really, really powerful. Even though, he had to retract, it makes sense that he had to retract. Given that the board, I'm sure that the board kind of picked up the phone and they said, hey, Brian, if you want to remain CEO of Coinbase, you might want to tone it down a little bit. And he toned it down a little bit. However, you still see that Coinbase is getting ready to roll out, regardless. They're figuring out, a mechanism, and they even came out with some other ideas. But this, for Brian to come out and say, hey, you know what, Ripple's winning this thing.
Yeah, and look at this. And so Garlinghouse, Ripple CEO, made a similar statement regarding the SEC, noting that the regulator is refusing to provide a clear framework for crypto. Garlinghouse said, instead of working with the industry, the SEC is using their meetings with companies as lead generation for their enforcement actions. He added that many XRP holders have filed a class action lawsuit against the SEC, emphasizing these are the exact people the SEC is supposed to be protecting. And so what about that, Jeff? If, that lawsuit, last time I saw it was 55,000 and change, I believe, right? It was around 55,000 and change. If anyone has the new number or wants to drop it in the chat, but I'm sure it's gone up since then. We were inching towards 60,000.
Dude, it's such a high number that it's so unprecedented that the SEC is in a really precarious position right now. And as much as the G-Man, wants to make it sound that he's out there protecting retail investors, well, you know what? There's 55 or 60,000 of those so-called retail investors that you're protecting, or so-called investing or protecting of those retail investors that are coming after and filing suit against the SEC. So,
right.
It's mind-boggling, because this has never happened before. And, it's like, come on, enough is enough with the nonsense. And, we talked about it the other night. It is systemic across the board. You just have to turn on the news, and Gary Gensler's not alone. Something that I wanted to point out yesterday, Chip, was, have you seen the woman that they're trying to push into the position that Brian Brooks held of the OCC? I mean,
we've torn her
at every level.
Oh, we torn her apart here multiple nights. I mean, we did multiple videos. We crushed her because she's an absolute. When I say a nut job, I do mean that with a lot of affection. But she's a true nut job and a true believer. Like, she really is. So let's go back, and there's one statement here that's interesting. Some people suspect that Coinbase may be relisting XRP soon. Sounds like Brian Armstrong and Coinbase should be getting ready to relist XRP, one person tweeted. However, some are very skeptical, arguing that Coinbase will not relist XRP until after the lawsuit's over. Coinbase delisted XRP in January, soon after the SEC filed a lawsuit against Ripple Labs and its executives, CEO Garlinghouse, and co-founder Chris Larson. And I guess, the other thing that I think we're dealing with here, Jeff, is the fact that, now what if you have your XRP over on Coinbase? How do you get it off? It's like, what are you going to do? I guess you can move it to a cold storage wallet, but some people who don't know how to do that, like people, like more newbies that I know, and a lot of people in my world and sphere have said, like, well, I've got my coins on, XRPs on Coinbase. What do I do? And I'm like, well, you can move it off to a cold storage wallet. You can move it to another exchange where you have an off ramp. You can move it to Bitrue. You can move it to Uphold or another, exchange. I'm not giving advice on what to do, but I'm like, you can get it. You should be able to at least move it. And so part of the thing that's come out of this is that the liquidity has pretty much dried up, right? Because nobody has XRP. Everybody, the ones that delisted and don't have it, and people want, if you wanted to pull off $5,000, it could be very difficult because there is no more liquidity. And with the exchanges, the ones that delisted it, they don't have the XRP anymore. So this
So you
becomes,
might as well move to Uphold or BitTrue.
right. You might as well, but I'm just saying it's a big time issue because if suppose we break the all-time high and we go up to $4 or $5, some people are going to want to take profits and they might be stuck, right? I mean, that's very doable. It could happen before the end of the year. I'm just saying, not saying it will, but I'm just saying if it happened, we hit a new all-time high. And that's the other thing about this whole lawsuit. It has artificially pushed XRP where many other altcoins have had all-time highs this year, especially in the last bull cycle. The one that hasn't is XRP. So I think that's automatically being artificially sort of dropped as well. Then I wanted to get into this, Jeff, because I think we always say, look, everything sort of plays into each other here. Go ahead. You want to take that?
Oh, that one's for you. So Maximus David is asking, are they really going to relist or is this clickbait? And I would say,
well, it was just one person's opinion.
It's just, just our opinion. No, but
not our opinion, Jeff, not mine.
Not our opinion. No. So is Coinbase going to relist XRP? I believe that they will.
At some point they will.
At some point they will. Right. I think there's a lot more going on, but I do also believe that Brian Armstrong and the board over at Coinbase are looking at the way the SEC is managing things. And I think they pulled back a little bit, but it's also now they're seeing some momentum. They're seeing an opportunity to keep prodding at the SEC as well, because they see that, what's going on with the Ripple case. As the Ripple case gains momentum against in favor of Ripple against the SEC, then it gives Coinbase a little bit of confidence to do things the right way as well. And maybe, take that, risky move and say, hey, you know what, SEC, you guys are on the wrong side of this, and we're going to keep moving forward and we're going to do what we think is right. But I do believe, like you said, there has to be an outcome from the case before Coinbase does a relisting. I think they have to get some understanding before they do it.
Yeah, I don't see it happening. Just because they're a public company, because there's too much they can get into. You don't listen. I mean, there's like an old saying, you don't volunteer for the firing squad, and not the ones holding the guns, right? It's like, hey, we need a 6th person over here, and you see a bunch of people with guns over there. It's like, yeah, I'll volunteer. Nobody volunteers to be shot at. You want to mitigate risk. And if your attorneys are saying that, regardless of what your personal feelings are, you have to go with what counsel is telling you. So I want to put this up. This was Elon Musk. He said, the U.S. national debt is almost $29 billion or 229,000 per taxpayer. But that's trillion. You got that wrong. It's trillion. It's $29 trillion.
Just a drop in the bucket.
Right. And he says, yeah, even taxing all billionaires at 100% would only make a small dent in that number. So obviously, the rest must come from the general public. This is basic math. And that's what it's always intended to do. He says spending is the real problem. He's right about that. Like, you just cannot keep spending money you don't have. And this is how the rest of the world lives. This is how we live. You can't spend more. Otherwise, you're going to end up going into a serious debt or bankruptcy or something along those lines. And so Brian Armstrong answered it and said, exactly, it's gotten completely out of hand. If they're going to keep printing to service the debt and cover the deficit, then this will accelerate the move into crypto. Jeff, what do you think about that statement?
Man, I think, so Brian Armstrong, Elon Musk, I think they're really seeing things the way it's unfolding. Brian Armstrong, 100%. There's so many in the space. If you look at this migration towards digital asset, if you look at towards digital currency, you see a mass move because they see this meltdown within the fiat space. Why is it that now India is considering and looking at a CBDC? Why is it that Nigeria, one of the first to roll out a CBDC, is already saying how successful it is to get money into the hands of the people and move money? It changes the fundamentals of how they're doing things. However, when you look at the CBDC, very centralized, no different than fiat, and you're basically in the same position. But this idea that people are going to be moving in the direction of cryptocurrency at a faster and faster clip, I think, we're going to see it. We've seen little tastes of it around the world, little tidbits. We saw the meltdown of Venezuela. We reference this a lot. The Venezuelans looked for a salvation for their money. And obviously, some of it was a little too late. Some of them got in a little bit earlier. But overall, when you have millions of % of inflation and a devaluation of your currency to where it wasn't even worth the paper that it's printed on, then you start having a problem. And the people want to protect their wealth somehow. So they start migrating in areas that can protect their wealth, just like in Lebanon and just like in many other countries around the world. We talk about this almost every night. El Salvador is another perfect example of this idea that, hey, you know what? We got to move our money into digital asset. They chose Bitcoin as a starting point. Hey, that's awesome. They want to choose Bitcoin as a starting point. That's because it has notoriety. It has, first mover advantage. It's discussed on the world stage. They can, if El Salvador said, hey, let's choose Litecoin or let's choose Ethereum, they might have a little bit of a problem. Or they said, hey, let's choose XRP. People are going to say, well, what's XRP? But you go to the people of El Salvador and say, hey, Bitcoin. And the people are like, hey, we've heard of Bitcoin. We know Bitcoin. So the government moving in a direction to help stem the tide of inflation, of their inflationary fiat. And I think one of the areas that we're going to see is a lot of these countries that are tied up into this endless loop of inflation and a destabilizing currency. I believe that we're going to see more of them moving in the direction of digital asset. The fact that we see people in the, let's call it the West instead of first world, but let's call it, the West, or more, let's call it more developed economies. Right now, there's no real stress point in a developed economy that is pushing people in the direction of digital asset. However, right now in the U.S., Chip, we're seeing the stress point because we're starting to see in the U.S., we're starting to see a significant ramp up of inflation in this country. And we're also starting to see a lack of confidence in the government and the way they're managing the economy, especially as they target the billionaires, because we know it's trickle down. When they go after the billionaires with this unrealized gain tax, there's only 700 of them. How much money can you possibly take from 700 billionaires? What are you going to take? Once you take their money, it's gone. That's it. And now it goes to the next 700 people. So you could almost claim that the taxation of 700 people is unconstitutional because they're singling those individuals out unfairly amongst everybody else. So we've entered into an era of constitutional crisis, Chip. And
well, there
so
you go,
now,
Jeff.
so there's a lot of issues at stake. This is going to push more and more people into digital asset and cryptocurrency.
Right, because you're going to look at, how do I preserve any wealth that I have, anything that I have, a savings account, whatever. Before you would put it into gold or silver, precious metals, and now you're like, hey, my friend told me about Bitcoin. My friend told me about Ethereum. Someone mentioned XRP, Solana. I mean, whatever it may be. And this seems to be the best sort of a hedge against not only that, but also a hedge against potential inflation. And I think that's why we're seeing so hard go at it with these nutters here. But if you look at this right here, here we go. This is Ashish Birla, and he obviously is what's his official title over there at Ripple? He's the general manager of RippleNet at Ripple. He's RippleNet at Ripple. A lot of Ripples there, Jeff. But he says if you're in the
RippleNet,
if you're in the tokenization business, stable coins, NFTs, etc., you are in the liquidity business. I like that. It's a pretty powerful statement. And that liquidity business is going to need interoperability. And so it's kind of a subtle, and the way I look at this is sort of a subtle shout out to the ODL product, to the XRPL, because you can read into it, but knowing what we know, if you're in the tokenization business with stable coins, NFTs, or whatever, you're in the liquidity business. What does liquidity need? Well, liquidity needs interoperability of some kind, right? You have to be able to move between either cryptos. You have to be able to move into other areas as far as like fiat currency or whatever it might be. But you got to be able to be interoperable. So I see that as What he's really saying is, look at that market. How big is that market growing? How big is that market expanding? Oh yeah, we'll be there to service it because we are Ripple. That's my take. What's yours, Jeff? Oh, geez.
That's that's my take, Chip. That's the man. That's the man of the hour right there, Chip. Look at that. He means business.
Fish lips.
He means business right there.
Business.
Look at that guy. Look at that guy. Business. Look at that. With that pointing finger and all. So I think, here's the problem. So the SEC is likely to get the green light to target stablecoins this week. This guy from that once professor of MIT has got a mission, and his mission is to try to take down the crypto markets, one by one. And, here he is right there. That's the guy. That's the man of the hour. And it's super problematic, Chip, because you look at Ashish Burla, you look at some of the other agendas. This guy, he's going to keep targeting, just like some of the others are going to keep targeting. Right now, there's a battle of wills between the CFTC and the SEC, and I'm shocked by that. I don't know if it's just theater or if they're actually in a battle of wills to see if the CFTC is going to be able to oversee the crypto space. But if Gary Gensler wants the stable coins, he once referred to stable coins as poker chips, and maybe he's not wrong about that. I don't know,
Stable value coins, Jeff. That's what he calls them. He
yeah.
changed the definition to suit his aggressive behavior.
That's true. Yeah, you term it as if we lose the war on terminology. Now, there's always a war on terminology, and if you let people take advantage of that war on terminology, you lose. And so, like you said, what is it called? A stable value. So a stable value coin is a security. So if you let him dictate and dominate the terminology and everyone adopts that, but you notice that no one else is using it and they're calling him out, calling him to the mat, but boom, there's the guy. He thinks he knows his stuff. And you know what? People need to stand up. You know why? Because we're the majority and we're not going to let it happen.
No, that's right. But you want to know who's standing up. And this was something that was sent to us by none other than OTC family member, JV the Great. But Warren Davidson, who also appeared on the chain, Jeff, which was awesome having him here.
He did.
We dressed up and he dressed down. Congressman Warren Davidson. So look at this right here. He says the crypto industry deserves regulatory clarity when it comes to yield products and stablecoins. I'm glad to be joined by Tom Emmer, Ted Budd, Gonzalez, Rep Trey. I don't know who Rep Trey is. Who's this? I don't know his other hand. Oh, Trey Hollingsworth. And this is Anthony Gonzalez. And we're requesting the clarity from the SEC so that the innovation can thrive in the USA. Now, Jeff, when I first read this, somebody from Congress was requesting clarity from the SEC, but that's if you dig in a little bit deeper, that's not really. I think that's just a phrasing here because I was like, well, wait a minute, Congress is the one in charge of creating the clarity. But that's why I said originally my original intent, idea was, well, okay. So they penned this letter to your buddy. Throw him up on the screen, Jeff. You have him up there?
Yeah, I store boxes of clarity in the office. So
you sure do.
But I'm holding them, for that moment when we need a lot of clarity.
There you go. There's the door.
There's the man of the hour. He should be on the cover of Time magazine, like all the rest of the despots.
Despots.
Oh, did I say that?
You did out loud. You said the quiet part out loud, Jeff.
That was the quiet part. No, go ahead. Sorry.
I was say sometimes I get a little bit, a little bit on fire, and Jeff's all on fire today. He lights it up, and otherwise I'm just a little more like chill. But I wanted to get in.
Yeah, go ahead. No, go ahead.
I want to get in this. He says, "Dear Chair Gensler, we write to you today to request additional information regarding the SEC's interpretation of existing case law." So that's why I was saying that tweet was a little misleading. He's not really looking for clarity. It really is, but if you're trying to put it in a tweet, you just kind of have to make it work. They're looking for the SEC. They want the interpretation of the existing case law. So he's not asking for clarity outside of that. He's saying, hey, based on existing case law, in particular, we're interested in better understanding your interpretation of the law as it relates to asset-backed stablecoins, yield products offered by regulated cryptocurrency marketplaces. Past cases such as Marine Bank and Reeves include an important factor in the analysis. Now, whether some factors such as the existence of another regulatory scheme significantly reduces the risk of the instrument, thereby rendering application of the Securities Act unnecessary. And so they're quoting there directly, and I had to look at the footnote to find out what they're quoting. That was that's ID at 67 is what they're, but that must be must be Reeves versus Ernst & Young, perhaps. Not exactly sure. While some stablecoins and yield products are issued by unregulated entities, both products may be offered by chartered banks and trust companies, and other products are offered by companies licensed by states as money transmitters. In these cases, bank and bank-like prudential regulations determine minimal capital requirements and limit the permissible investments that can be made with funds backing stablecoins. It's not obvious that these regulatory structures, which are already calibrated to address stablecoin issuer capitalization risks, would otherwise need to be addressed through federal securities regulation. So break that down, what he's saying right there, Jeff. He's basically making a point there, right?
Solid. Yeah, go ahead.
Well, let's say further under the Marine Bank and Reeves standards, it would appear that products offered by such regulated parties would therefore not qualify as securities, while products offered by unregulated entities could. And what I like is he's quoting two specific cases. When you have an outcome from a case, that's what you refer to as case law, because based on the outcome, it becomes part of the case law. He's citing Marine Bank and Revs. I don't know, it's R-E-V-E-S. I don't know if you pronounce it Revs or Reeves. He's saying based on these two rulings, it wouldn't appear that this would be an issue because it's already been calibrated to address the stablecoin issuer capital risks. It doesn't have to be addressed through federal securities regulation. He says, so with that in mind, please provide a written response to the following questions no later than November 19th, 2021. So he said, what types of bank or bank-like regulation, for example, state money, transmission licensing, state trust charter, state banking charter, or federal charter, would under Reeves generally obviate the need to apply security laws when regulated parties issue stablecoin or yield products? What do you think about that question, Jeff?
I'm looking up the case.
Cool.
But let's say what types of banks or bank-like regulation would under Reeves generally obviate the need to apply? So that's it's a good question. Need to understand the case a little bit better to answer that. So I was looking up the case, and the case here, it says this case presents the question whether certain demand notes issued by the Farmers Cooperative of Arkansas. Let me make sure there's the right one. There's Reeves versus Ernst & Young. So here it says this case presents the question whether certain demand notes issued by Farmers Cooperative of Arkansas and Oklahoma are securities within the meaning of the Securities Exchange Act of 1934. And they said we conclude that they are. Now, this is the Supreme Court. This was in 1990. So it was decided in February 21, 1990. The case started in November of 89. So it really didn't go on that long. The co-op is an agricultural cooperative. At the time, Relevant had approximately 23 members. So I think if you look at the fact that it's a cooperative, each individual is obviously invested in to get something. So it says here, in order to raise money to support its general business operations, the co-op sold promissory notes payable on demand by the holder. Although the notes were uncollateralized and uninsured, they paid a variable rate of interest that was adjusted monthly to keep it higher than the rate paid by local financial institutions. So you saw a little bit of a change. They said, well, if financial institutions paying 1%, we're paying 1.5%. And they were constantly adjusting accordingly. So you could say, hey, you know what, the investment in that case, they look at it as a security and doesn't meet the Howey test. The co-op offered the notes to both members and non-members, marketing the scheme as an investment program. Advertisements for the notes, which appeared in each co-op newsletter, read in part, your co-op has more than $11 million in assets to stand behind your investment. The investment is not federally insured, but it is safe, secure, and available when you need it. So it's kind of, and here it says, despite the assurances the co-op filed for bankruptcy in 1984, at the time of the filing, over 1,600 people held notes worth a total of $10 million. So, what are your thoughts on that? So here they are, they're bringing up this case, Reeves in Ernst and Young, and there's a lot to it because they believe that they were selling a security.
Well, what I like about it is he's saying based on case law, existing case law, because we don't have any clarity to go on. It's not that you can cite, the Token Taxonomy Act, and I think it goes back to this right here. We're requesting additional information regarding the SEC's interpretation of existing case law. And what he's doing is he's lobbing out two fastballs, saying here you go. Here's Marine Bank, which is Marine Bank versus Weaver, and that was 1982, and the one we were just covering, which is Reeves versus Ernst and Young. So based on that, explain to me, he's basically saying, well, how does it fit the structure based on that? So he's going to have to go review it. He's going to have to come back with something. That's kind of the way I view it, without knowing all the, the inside baseball about how that case was decided. The bottom line is like, if you're going to call something a security, you better base it on something we know of. And the best thing to do is look up case law. And I like how he's basically throwing these questions. The other one was, what aspects of those regulations are sufficient in protecting investors when regulated parties issue stable coins or yield products? And he gives the example of minimal capitalization, permissible investment standards, and examinations. And conversely, what aspects of the existing regulatory regimes are insufficient to protect investors, if any? It's important the Commission provide clarity regarding the SEC's position to avoid innovation dampening, uncertainty, and opacity within these markets, which would likely harm the very investors the SEC is tasked with protecting.
Yeah. So Chip, I think this is solid. You look at the way they're putting this together is brilliant, because one of the things that has been lacking from our buddy over here that we all have some affinity for. We all love this guy, but so the one thing is that he comes out and he says, well, they're all securities. They're all, in my opinion, they're all securities, and they're all securities, and this is it. And this is what he's doing. They're all, Chip. They're all securities. Why? Because I said so. No fact. No, I'm not gonna present it. Coinbase, you need to stop. You need to stop what you're doing. Otherwise, we're going to serve you and we're going to sue you. Because why? Well, why should we do that? Because it's a security. Well, why is it a security? Because I said so. And so there's a distinct problem with that, line of process. And so what we're seeing with that letter is calling him to task. It's like, all right, Gary, you have all these brilliant ideas, because obviously they should have put in the letter, Gary, you obviously taught at MIT, and you have all these brilliant.
It'll be in the response as first sentence. As you know, thank you for your question.
Right,
which
yeah.
always when he gets in trouble, he always thanks him for something. And like your father, my father also did this, and and thank you for the question. And I followed your career too, and it was awesome. That's what right. He starts like reaching for stuff, like trying to look for something to say, fill right, that next thing in.
Exactly. And then he's going to come out, and what they're asking for is like, okay, Gary, you have these great ideas. Well, now explain it. Back up your ideas with actual case law. Why don't you reference why you think everything's a security? Why do you think the SEC needs to have more power? Why do you think they need, the SEC needs to oversee, all of the digital asset space? Why do you think the SEC needs to have oversight over stable coins? The Securities Exchange Commission, so it's securities. Is stablecoin a security? No. So why does the SEC need to oversee stablecoins?
Well, here's the other thing, Jeff, I want to know. Okay, so it's a really good topic, but so let's connect some dots here. And I'm not saying this is what's happening, but who's running the Treasury? Who's the Secretary of Treasury?
I don't know anymore. I'm not sure if it's that Let's Go Brenda.
Janet Yellen, right? So, but what did Janet Yellen used to do in the previous administration? Well, the two administrations ago, she was the Fed chairwoman. So she was chair of the Federal Reserve, right? And now she's in this job in Treasury. And now she's mandating, we got to give the control over to the SEC. First of all, they don't have any jurisdiction to say so. It's just fodder. It's just useless, about as useless as anything it would be written on, a directive, an email. It doesn't matter because it's senseless. And they've gotten into so much trouble by putting these big, bold ideas out there that go nowhere and mean nothing. And I think Alex D. Vlogs called it right here. Let's go, Brandon.
Let's go.
Go XRP.
Hey, guys.
Sorry about that. I meant to turn that off.
Let's go,
The other-
Brandon. Hey,
go,
guys. This SEC has balls to ask for another extension in January. Wouldn't surprise me. Now, there was an extension already granted, and somebody else was asking here, do you think it's going to be over in December? Here it is. So Silverback, and it's not going to be over in December because they extended discovery until December, January timeframe.
Yeah.
So I think Jeremy Hogan was saying if that's the case, if they extend discovery, they're not going to actually sit down again until probably March. So there's going to be a significant amount of time where this kind of drags out a little bit into 22. No settlement.
Yeah, no settlement at all. I don't see this. So just some more positive stuff with the, go ahead and stop this here. Saw a great tweet by Leonidas at Leo Hadjiju, whatever, I can never pronounce his last name, but he put out this cool video. And I thought it's kind of interesting. This is IBIS Management. They offer alternative cross-border payment options like Thune's Payment, MasterCard, and Ripple via its Alchemy and Swiss Route products. So this is a little video that they put together on the subject, and I thought it's probably worth playing here. I think it's pretty interesting, at least the way the video goes. But let's watch this here.
Present antiquated problems that take longer to solve and harder to avoid. We all know the challenges that the banking industry is facing. Consumer demands are growing faster, compliance regulations are becoming more strict, future-ready competitors are overtaking the market, and correspondent bank relationships are proving to be less sustainable. The solution is simple. Your future in cross-border payments execution demands modern alternatives. Our Alchemy and Swiss Route service solutions now provides financial institutions with an additional expanded service range and a unique, non-disruptive connection to a diverse selection of automated, end-to-end cross-border payment services facilitators, providing banks with options and essential value in cross-border payment alternatives through globally trusted brands such as Ripple, MasterCard, cross-border services, and now Thunes.
Dude,
Although
huge.
unique by their own antiquated problem.
Sorry, what you were saying, Jeff?
So that's huge.
Yeah, it is pretty huge. So, yeah, not only is it, I think it's huge for a number of different reasons, but it's great to see somebody put together this video, really well-known, companies and organizations, and they're not in the least could care less. I mean, this is not a U.S.-based company, but they could care less what's going on with the SEC because it doesn't affect them, and they could care less. So it's bold in the sense that this is the kind of things that should be happening, but everyone's running around little scared little animals like, oh, no, we can't relist XRP. And here we are talking about Ripple and basically the tech. So you have a choice of using Ripple, Thunes, or MasterCard through their Alchemy product. It's pretty cool. It's a nice video. It's a little bit longer, so let's play the rest of it here.
Services
MasterCard
and now
and,
Thunes.
Thunes. I was going to say MasterCard and Visa are really coming out aggressively, trying to take advantage of the network they already have in place to say, hey, we can offer this as well. And they're trying to figure out how they bring crypto into their offerings. And they're going to be big, major competitors, but their business model is still different. They're more of a, they might be B2B. They might be, they have a lot of, B2C, but they're not a RippleNet, so to speak. They're not a settlement, organization, but, I think they do things and we're going to see a significant ramp up of them getting into the blockchain and crypto space. And it's going to be impressive.
Well, they're looking to compete, and they know that old models are kind of either going away, changing, something's happening, and they want to be ready for it, which is why they're in the acquisition game, the buy versus build sort of scenario where you buy a company versus trying to think about how long it might take to build it and would it be successful. Somebody that's already proven it, the use case and the model out. But let's listen in and let's see the rest of this here.
Although unique by their own design and consumer requirements, all these alternative avenues share a common goal: assuring business continuity and obtaining scalable growth by leveraging a single existent platform's connection and integration, a consistent service quality with automated back offices, real-time transactions through direct channels, reduced risk from optimal compliance standards, significant reduction in operational costs and transaction charges. A cloud-based environment for ease of access. From origination through processing, orchestration, clearing, and settlement, you are guaranteed a fully compliant integration on secured platforms that are currently sustaining over 50 Caribbean banks and financial institutions. Ask us about alternative cross-border payment services and discover a world of seamless payment options and new rails.
This is the power of Alchemy and Swiss Route Services.
Brought to you by IBIS Management Associates.
Swiss routes.
Swiss Route, IBIS Management.
Swiss
There you
route.
go. There's so many places down here in South Florida named IBIS.
Dude, it's I'll tell you what's amazing. I had a meeting tonight and we were talking about some things politically related, but I was referencing what's happening down in Miami, and I was talking about Kathy Woods moving into Florida, Celsius moving into Tampa, Coinbase opening up an office down in Miami because they're hiring the legal team right now, and there's so much going on. FTX, with the arena in Miami, the mayor of Miami with the Miami coin. Man, there's so much going on. And then you see ads like this, rolling out with MasterCard. And man, how can you be bearish? How could you be Mr. G, the G man with all of these great things going on? How could you be that guy? Why would you want to be that guy? It's crazy.
Well, Jeff, one of the things that Congressman Warren Davidson gets into, one of the first lines he talks about, well, he kind of hits it at the end, really. It's the last paragraph when he talks about crushing innovation, thwarting innovation. And he's getting at the heart of what's really going on. Why would you do that? When the internet was first coming out, what if they were like, let's tax it, let's bury it, let's call it evil, let's call it would have just died and it could have taken off somewhere else. And you wouldn't have what we have Silicon Valley over there, over there in San Francisco. You wouldn't have that at all. And that's exactly what they're trying to do, but they don't care because their end game looks very different on what they're trying to achieve here. And I want to throw this up here because this is a tweet. Actually, this is not a tweet. This is actually a news story, but Jeff, you'll like this one. Coinbase returns to #1 in Apple US App Store. Crypto exchange Coinbase's app has once again topped the App Store rankings as the most popular free app in the United States. So what does that tell you if it's the #1 free app? Because guess what? All exchanges have a free app, but Coinbase is leading the way. Now, I don't know if it's just easy, to onboard or whatever that may be.
It is super easy. It's easy. It's becoming a recognizable name. It's in the United States. Even though, think about like Gemini, crypto.com is trying to make a play over here. Gemini's here. Who's on Gemini? Who's on Kraken? I have a Kraken account. I've never done anything on Kraken. Maybe, back in 2017. But you've got Coinbase and it's the easiest, because you go on Coinbase, it's almost like logging into your bank. You go to Uphold, it's a little bit, daunting. You go to BitChute, a little bit confusing. Go to Coinbase and it's very obvious. It's just like, oh, it's kind of like being on my bank. They did a good job with that, first onboarding. Very simple. Not to say it's very simple. It's not to say it's the best, but it's very simple. It's got name recognition and they're publicly traded right now. So.
And Jeff, they did something very smart. They broke it out, right? So if you're a more seasoned investor and you want to put, stop and, put orders and all that kind of stuff, you a little more sophisticated trading, we'll go to Coinbase Pro. So, but if you're just a regular, just a regular user and you just want to buy it and hold it or whatever, that's a whole different story. Go ahead and throw that up there, Jeff. Yeah, they have a wallet too. Yep, and Coinbase Pro. Yeah, there you go. I'm getting sick from jumping around there, Jeff. We're moving all around here. So look at crypto.com. Another one I find pretty easy to use that I have used that before in the past and recently. Another popular crypto exchange also in the App Store's top 10 rankings. So there you go. There's another one. So 2 exchanges in the top 10 free apps. Now that to me, it doesn't matter really who they are. The bottom line is that's a huge change from maybe going back 6 months where you wouldn't expect to find anyone, maybe a free game or whatever the hottest app is. So I think that is pretty cool. Because you look at it, they launched their first app in June of 2014. It's seen almost 1.5 million downloads to date, with a sudden increase in downloads over the past 48 hours. But you know what else they offer? A Shiba Inu, I believe, too. I think that's why they had a little bit of issue. They got the SHIB, you know, and that's one of the things. They have the highest fees and they crash the most from Very Easy. Alan, he's absolutely right about that. And something did happen yesterday. I saw John Deaton tweet. He goes, is the Coinbase related outage down right now? Does that have anything to do with Shiba Inu?
I think it does. I mean, you think about what's happening even in the stock market when a stock gets overheated, meaning that there's too much activity in too short a period of time, they shut it down. And there's certain triggers. And so, I don't know why all of Coinbase crashed, but maybe because they have Shiba over there and there was a lot of excitement. But we've seen Shiba go down, we've seen Coinbase go down a couple of times. And, and I kind of think back to Elizabeth Warren with her story of, hey, you know what, there's this person and they invested $100 and then the market was going crazy and then it started going down and they tried to sell their 100 because it was the last $100 they had. And then Coinbase, they didn't say Coinbase, but then the exchange went down and they couldn't access their account to sell it. And, and so I said, oh, maybe Elizabeth Warren was right about that. But obviously not because, for many reasons. But, is there some a validity to that conversation, Chip? If you are an exchange, do you hold a certain obligation to your clients to have like a 99.99% uptime guarantee? And if you go down, Jeff, you become known for when there's a run, you go down. I think that's bad form. But it's not just Coinbase, because we've seen it with many of the exchanges. For some reason they do crash when there's a lot of volume in a short period of time, but maybe they're shutting them down for a reason. I don't know.
Yeah, but Jeff, you remember when Shiba Inu first came out? You remember what they did was they gifted a bunch to Vitalik Buterin. They said, I don't know, we view you as a supreme leader. It was something where was some sort of an honored thing where we wanted to give it to you, and he turned around and he gave it to, I don't know, some Indian I don't even know exactly what it was, but he gave it to another organization. And check this out, Jeff. So all that SHIB that he burned it. It was another coin where he gave it away. All that he burned, it's now worth $32 billion. So he basically burned $32 billion. Yikes.
It was amazing when they gifted it to him and he decided to burn it, maybe there was legal reasons as to why he did that. There had to have been legal and tax reasons why he. But he
could have put it in an escrow account and said, "I'm going to hold it to see if it goes up. Then I'll gift it out, or I'll be able to do more." Because what could you do with $32 billion?
And either way, if he's gifted that amount, he's liable for the tax burden.
That's true too. That's a heavy tax bill.
So, and he would have to sell, and so, but that would be a huge amount of money. So he'd have
only
to
the gas fees, Jeff.
Oh yeah, you forget about the gas fees. Yeah,
it would cost $46.8 billion just to sell it, and the gas fees. So he wouldn't be able to come up with
it. That's true. Based on
The Sheep fans are all the richer for it, right there. And there he is. Oh, I should have kept it, man. I should have kept it. I knew I was going to keep it.
Should have done it.
Yeah, it was early May when he burned more than 6.7 billion worth of Sheep tokens. Well, they're now. Dude. That's crazy, man.
It's crazy money. It's like being in Las Vegas. It's just fake money at some point when you're talking about those types of sums, and he's just burning it and doesn't care and all this stuff's going on. But it is crazy though. You look at what happened with the SHIB, and there's a couple wallets out there, one in particular, it had $8,000 investment a year ago, August, right? Crazy. August of 2020, 8,000. Now it's kind of sitting stagnant. But that 8,000 is worth $5.7 billion. There's another
Best
one
trade
ever, invested $3,400, also worth a shit ton of money. So could you imagine? I mean, imagine you lose we've talked about some of these others that lost 100 million, 150 million. Could you imagine? You're like, oh shit, I can't log it. I lost. I don't know where I put it. I invested 8,000 is worth $5.7 billion. You're talking about forever changing everything. And, I mean, it's the biggest and best gain, I think, in history of all gains, 8,000 to 5.7 billion in 1 year. And, what could you do to leverage that? Can you sell it? I mean, what would you do?
It's the best trade ever, Jeff. You know how like people are always shaking you down for money? Be like, okay, here, 1,000 of my friends, I will give you $1 million each. And then, or I'm sorry, yeah, $1 million each, and then go away, and then I'll still have 4.7 billion, right?
Exactly.
I mean, put that in DeFi, and it's like, because I've been watching some of these DeFi projects that people are tweeting about. It's like 1,200% gains, but not financial advice, and it's very risky. Really, only invest what you want to lose. Well, why would you want to invest something where you're almost always going to lose it when you can put it into something a little bit better? XRP Hollywood, another OG, says if Coinbase crashes due to Shiba, how the hell will exchanges not go down due to the volume of ODL in the future? That is a good point, but I do think that
a little bit different.
It's a little bit different, but your point is well taken.
Exposed, but the ODL volume is not exposed to the public. So we're talking about the back end versus retail. So ODL isn't exposed to the retail. So it's right. The ODL is liquidity that is available to move money. It has a specific purpose versus it impacting the volume that's noticeable on the retail side. So I don't think that we're going to see there might be bigger volume movements, but it's not it's not the same. I don't think so anyways.
But I think his point is that if you got a lot of volume going into the exchanges, like if you've got like, let's say people sending stuff there, like there could be a lot of volume that would affect Coinbase in sort of a similar fashion where it would get so much incoming or outgoing, right? I don't necessarily think he's really pointing out the ODL product, but he's saying that how would it not go down if you got massive volume of ODL in the future, right? Because you could have stuff coming in and out.
Yeah, I don't think it's the volume that's shutting down Coinbase. I think it's the overheated trading that's shutting down Coinbase. I
thought it was the little mice
ramp up at the price.
And the machine, they just got tired and took a break.
What the problem is, those little mice, they were invested in Shiba or whatever the big one is because they got insider trading, and so the mice are spinning the wheel that's fine. They're like, holy crap! There's a rumor, and then they got to jump off the treadmill and look at their phone to say, holy crap, I'm out of here. I just retired, and then the whole market crashes.
Yeah, and then on a similar note, so we have our pal. Let's look at how he peers at you with these eyes, Jeff.
Dude,
this is Michael Saylor. He has no intention to stop purchasing Bitcoin anytime soon. MicroStrategy beats estimates for earnings, revenue buys, and buys 8,957 Bitcoins in Q3. He always has that grimace on his face. He's really happy. He's just trying to contain it all. Sometimes you're so happy you want to cry.
Man.
He says, so where does it say what he's worth now? Let's see. Yeah, so MicroStrategy reported a slight year-over-year increase on revenue, $128 million during the third quarter, and an earnings surprise of 66% for the third quarter of 2021. Analysts expected revenues of about $127 million. We're profitable. We're generating very healthy margin, and I'm very pleased with the maturity of the business of Michael Saylor, who's the chairman and the CEO. Which is good to be both, Jeff, because you get a paycheck from each. But
dude, he's loving life. He's just like,
he's worth about $7.5 billion now in Bitcoin.
Oh man, and they ask what's the business model now over at MicroStrategy, and his response is buying Bitcoin. that's
right.
That's the new business model. What do you do? And so you've got the president of El Salvador just bought another 420 Bitcoin.
That's right.
So
a little bit of a dip.
To his portfolio.
Right. Why wouldn't you? It's fantastic, right?
That's it.
There's another note in here. Sometimes your notes make me laugh. You know the one I'm talking about, right?
Oh, I had a couple of good ones in there.
Yeah, Jeff and I always put little notes so we can sort of circle back. And I read Jeff's notes, and because what we do is throughout the day we research or stuff that we see exciting, or if someone like JV the Great sends us something, or in our chat group, we might see something. So
did you read the one about the unrealized capital?
Yeah,
gains?
that was the one I was talking about. Yeah, a bunch of effing tards. Yeah, I saw that. Good luck.
Yeah, good luck collecting.
Good collecting an effing dime. Yeah, that's a good one. You know what, Jeff? But by the same token, though, are they going to show discrimination when then I go ahead and I claim the unrealized losses? Like, oh God, I lost so much. It hasn't been realized yet because I'm still hodling. But if I bought, let's say XRP at 384 and it went down to 20 cents, that was an unrealized loss right there, Jeff. So how are you going to tax that? I guess I'll get a credit for that, right? This is how ridiculous they become.
Well, this is the stupidity of it, Chip, is that you got these 700 billionaires, and they've got a team of lawyers and a team of accountants and a team of investors, right? And this team, their objective now every day of their life is going to be geared up to, okay, you have unrealized gains, and if now we have to offset it with losses. Because you're going to be taxed on the gains, we need an even balance of losses in order for you to realize your actual gains. So you might have a dip in your gains, but we're going to offset them with losses. And that's going to be their entire strategy. So they're going to offset losses or offset these unrealized gains with losses. And they're going to say, okay, we lost. Sorry,
Amazing.
We're not paying taxes. And that's how it's going to be. You're talking about 700 billionaires. These 700 billionaires have everything at their disposal. The people that came up with this strategy are dimwits, and it's negative, it's counterproductive, and it's going to bite them in the ass.
Yeah, you know why, Jeff? Because they never can compete in the arena of ideas. They always have the worst ones ever, and they always say well, this new infrastructure bill, don't worry about it. It's going to be fantastic. We're not going after the commoners. No, not the fiefdom. We're not going after them. But then you look through it and you're like, well, geez, there's a gas tax in there. And who does a lot of the driving? Well, the working class, when they're going off to their jobs, their slavery every day. And you're like, whether you work remote or not, but who do you charge? Who's going to get hurt by it? Not the people that they'll burn $100 bills. They could care less, and they light their cigars with them. They don't care. But who are you hurting with that? So it always ends up trickling down. It has in every society. We're only going to tax the millionaires. By the way, that's how we ended up with the tax in 1913. That's how or the Federal Reserve, they said, well, we're just, it's not going to be a big deal. And then when the income tax came in, just going to charge the rich people, and then the rich people, and then the less rich people. And then, sorry, sucker, you're getting charged too.
Nice. How do you
so
like that?
There you go. Yeah, a bunch of
gold away.
Yeah, just like that, Jeff. A bunch of losers. So that's how they see us, right? And I saw something today where I don't want to even get into that. It's a little too politically motivated. But anyway, the bottom line is that, Jeff, we do stream 6 days a week. And this next stream coming up is your solo stream, which is 8 o'clock on Saturday morning from
8 ain't so.
8. It is. It's coming up, Jeff. I hope you got something. Hope a good rant picked out. And of course, Sunday through Thursday, 8 p.m. to 9 p.m. And then best way you could help out, on the chain is to share this with people, tell friends about it, say, hey, why don't you sub? Why don't you give it a shot? Give these guys a shot. Is every show great? Yes, it is. Is it the best show ever? No, it's not, but it's pretty close. But you just say hey, and if you don't like it, then you keep it to yourself. That's what I always say. Don't get into a big show.
If you don't have any good to say, don't say it at all. Hey,
That's
so as we're going out, Chip, I mean, this is where you can stay bullish. Don't let the negativity of Daddy G or Janet Yellen or Elizabeth Warren, their time is short. They'll be gone in 24. There'll be a changeover in 22. There's a lot of things happening. But here's how from a corporate perspective, how you're moving in the right direction. Forget about all the noise pollution that they're putting out there. Citigroup CEO says digital assets will be part of the future financial system. And then there's one comment. I should have pulled this up. This is it right here. Just the opening sentence, which is CEO Jane Fraser says there is a place for cryptocurrencies in the traditional financial system. And that's all you have to know. And then look at this. And she said digital assets provide benefits in the area of real-time payments. What else do you need to know? Forget about Gary Gensler. That guy doesn't know, much. So maybe he knows a lot, but not in this topic.
Make sure that you click that like button, the subscribe, the notification bell. A lot of times we have hundreds of people and they're coming in and out, and some subscribe, but a lot of you guys don't hit that like button. That does help the video too. It helps to share it. So you come in here, you drop a comment. If you say you're watching this in the replay, didn't catch it live, that's cool. Drop a comment. That helps as well. So, because God knows, Jeff, we get enough people talking about Bitcoin and call this guy and this guy and that. And somehow, for some reason, they're almost templates of each other. But I don't know why the algorithm over at the place cannot pick that up. They just cannot. I don't know why. I just don't. Just can't quite figure it out. Let's go, Brendan. By the way, that was like there were like 4 different versions of that on the Apple charts, and the
awesome.
first Let's Go Brandon one displaced Adele. So there you go, the biggest pop star in the world.
That's it. Saturday morning, 8 a.m. Eastern Standard Time. Chip is the next show. Man, this is awesome. I love every single one of these nights. You know why? Because we have the best and the brightest in the YouTube crypto space all gather right here on the chain. On the Chain is the slowest growing channel in crypto history, but that's okay because we're attracting the best and the brightest. When you have the best and the brightest, sometimes you have to grow a little bit slower, but we always get to the finish line. So that's the best part, Chip. And with that,
we're out of here. See you guys on the next one. Jeff will see you Saturday morning. I look forward to seeing you guys again on Sunday. Have yourselves a great weekend. We'll be back with all new stories, all new rants, all new fun. See you soon. Bye-bye.
Are you down with OTC? Please like, subscribe, and click the bell to be notified when the next video drops.